Good morning, good afternoon, good evening, depending on where you are connecting to us from. How are you all doing today? It's a pleasure having you here. Today is a brand new day. It's a Monday, the 29th of July. And this month is going to be over in a few days. And today, we are going to be looking at the trading headaches and prescriptions, the many issues that traders are facing, the many issues that you are facing, and of course, the prescriptions to them, the solutions to them. They say that for every problem, there is a solution. And that's what we're going to be looking at now. We are going to be looking at the solutions to the many problems. So this is going to be more or less a call and answer kind of webinar in the sense that you already know as a struggling trader the issues that you are having. So let us know, and then we'll give you the possible solutions for you to work on. Right? I believe that sounds good. If yes, great. Then let us proceed. Right? So, as this is a new week, we always say, always good to check the calendar for the week, right? Always good, because you could easily say that this is one of the headaches that traders are facing. They do not check the calendar. I repeat, they do not check the calendar, right? So check the calendar, make sure that things are well covered with respect to the volatility so that you are not caught off guard, right? Very key, very important. This week, I can tell you for a fact that the news is going to be explosive. I repeat, this week, I can tell you for a fact that the news, the market is going to be explosive, right? Because if you look at the lineup, for this week, it is rather on the heavy side. Now, I'm just going to quickly switch the slides just to show you this, because as we always say, this is more or less the first ritual that traders need to look into. I repeat, this is more or less the first ritual that traders need to look into with respect to checking for volatility for the week, that you know when to trade and when not to trade, especially based on the type of trader that you are. And that is also another headache. Traders don't know the type of style, the type of traders that they are. People don't know the type of traders that they are. Are you a scalper? Are you a day trader, swing or position trader? Traders are not really aware of that, right? So look at the lineup. For today, Monday, July 29th, you can see we don't have anything based on high impact news. And then by the time you scroll down, you can see Tuesday, you can see the lineup for Wednesday. So you know by Wednesday, it's going to be extremely busy. But because we focus on the USD, you can see the USD is here from Tuesday, Wednesday, USD, and a whole bunch of other instruments, Japanese yen, Australian dollar. Thursday, you can see as well, the USD is also here. And Friday is going to be August 2nd, a new month, and the first Friday of the new month. So we are going to be having the non-farm payroll over here for the US dollar. So this is going to be explosive. So this week is fully packed with high impact news, right? So that is one of the major problems that traders are facing, one of the major headaches that traders are facing. And of course, the solution is to check the calendar before you do anything. Check the calendar for the week, check the calendar for the day, and you should be well aware of when the market is going to be volatile so that you don't get into any issues whatsoever. Okay, so with that said, let us continue with the trading headaches that we have, right? So, welcome, welcome, welcome. It's a pleasure having you guys here. For those here with us live, for those that are going to watch this on a replay, thank you for joining us, right? It's a pleasure. A quick disclaimer, the information that we are going to be sharing is not going to guarantee success. It is what you do with the information that will determine if you are going to be successful or not. And you already know that this market, trading the financial market that is, carries a high level of risk. So you must be well versatile with how to manage your risk, how to minimize losses, because losses will occur, whether we like it or not. And of course, this is brought to you by CSA Forex. My name is Tolu, and the name of the academy, CSA Forex, which stands for Common Sense Approach to Forex Trading. There is always a common sense approach to anything and everything in life. And that's why, based on these trading headaches and the prescriptions, you could more or less call me your doctor. And here is the clinic. Today, you are walking into the clinic to seek solutions to the many problems that you have been facing. These trading headaches, if you are a struggling trader, whether you've been struggling for weeks or months or maybe even years, you would know that these things keep on occurring. And the funny thing is, they are the same things that keep on occurring. There is nothing new under the sun. Traders that have been doing this for years, that have been struggling, especially struggling traders, right? Because if you are new, obviously you should not be having headaches now. You should not be having as much headaches as those that have been doing this for a lengthy period of time and haven't found their footing, right? So these headaches, we're going to make a list of them as much as we can make a list, and then you will know the ones that you are guilty of, and of course, how to solve them, because it is a solution that we are all after. At the end of the day, everybody wants to be profitable in the business. So the trading prescriptions are the solutions, are the things that the doctor will give you, right? Where you have to go and buy the medicine that will do what? That would help relieve the headache. So we'll be giving you the prescriptions, we'll be giving you the solutions. It is up to you to actually implement them. Remember we said that what? We said that the issues that traders are facing are many, and of course, there are always solutions. And as there are many, they are the same thing that traders have been facing for a long period of time. So we'd like to ask you, what trading headaches are you facing? If you think about it, maybe think about your trading from last week. What trading issues, what trading headaches are you facing at the moment? Think about it. Is it lack of education? Is it trading without stop loss? What do you think? These are questions that you need to ask yourself. And when you answer the question, I always even tell traders, make a list of the problems that you are facing. When you come over to the doctor, you come over to your hospital, clinic, or whatever, the doctor is going to ask you, what are your symptoms? Oh, I have headache. My tongue is bitter. My skin color is changing. My eyes are dilated. My this is that, and so on and so forth. And then from there, the doctor more or less already knows what is wrong with you. Oh, you are overtrading. Oh, this is what you need to do. You might need to reduce the instrument, and then you might need to use bullets where you place no more than 2 trades at the same time, as an example, to reduce overtrading. So then you have gradually solved that particular issue, right? So let's look at a list of these issues that traders are facing today. Following signals. I normally tell traders, you follow signals without knowing how to trade is very dangerous. When you follow signals, it is very ideal for you to at least know how to trade. Use the signals to compare to your own analysis. And then what do? You can trade ones that align with your own trading style. When you talk about signals, They are coming from someone who has analyzed the market. Do you know whether that person is a trend trader or is a counter trend trader? But then you just want to use the signals. What if you are a trend trader, but then the person you are getting the signals from, you're buying the signals from, is a counter trend trader, and then is giving you trade calls that's against the trend, that is against your style? Would that be a good one to follow? Think about it. A lot of traders that have used signals haven't done what? Haven't been that successful. And then they end up doing what? They end up dropping the signals and eventually learning themselves how to analyze the market. By that time, they have wasted a lot of time and even money. They have lost money as well in the process. Giving your account, giving money to a trader. When you give your account to someone to trade for you, guys, as we are having this discussion, if there are stuffs here that you, peradventure, are guilty of, note them down. Because we made a list based on some of the things that we are guilty of, some of the things that a lot of traders are guilty of. Just a combination of different things that when you take note of it, you would know this things that I am doing is even causing more headache. It's causing a migraine, right? So if you're giving your account or you're giving money to a trader, that is not the way to go about it, especially if you give your money to someone. I've heard so many stories where they give money to a particular person and that person doesn't even trade. That person does what? That person just takes the money and disappears. Or give the account to somebody and then he trades it anyhow. Or listening to traders online. You don't need to listen to traders online. Conduct your analysis. Now, there's something that used to happen to me back then in different groups. Whenever I conduct my analysis and I post my chart out, people will say, oh no, this trade is not good. This one you're looking at, don't take it, XYZ, ABC. And then what will happen? I would listen to them and I would not follow my own analysis. But then after, the trade worked without me. And then I'm asking myself, why did I listen to them? Why don't I make my own mistakes? Why don't I journal? Why don't I keep records and then improve? And then I start to reduce listening to traders. Even now, when I post charts in different groups and people say, no, they want to do this and do that, I say, okay, no problem. This is your car. Drive it the way you want to. I'm going to drive my car the way I want to. Simple. Guess what? When you do guesswork, of course, you know what happens when you do guesswork. It's more or less 50-50. You close your eyes, buy, sell, buy, mini, money, more. It's not the way to go. This is simply gambling. Learning on your own. Learning on your own is actually a headache, but people think it's not a headache. Why is it a headache? It's a headache simply because you are wasting a lot of time. You are putting yourself through a lot of issues. You are putting yourself through a lot of headache, a lot of time wasting. When you could learn from someone that has already gone through all the headache so that you can easily prevent those headaches from happening. So no need to learn on your own. There are people that have done what? That have gone through the years and then they can help you to reduce your learning process. Copying another trader. You're in a group. This trader places his own call or places his own trade, and you see the trade on the chart, and you just copy it. Copy it blindly. Some of those traders don't even put stop loss on their charts, but then you copy the entry, and then no stop loss, and the trade goes against you, no stop loss. Continues to go against you, no stop loss. Meanwhile, the other trader might be using a mental stop loss. A mental stop loss is where he or she knows where to exit or doesn't put it on the chart. And then when it gets there, manually that person exits. But you, there's no exit for you. Not a good way to trade. Overtrading. A lot of traders are placing too many trades. They want to make $1 million overnight. What do you think normally happens? If you are here and you're guilty of overtrading, you know that it doesn't end well. You place too many trades, you can't manage them all. You can't manage them all. They start to go into heavy drawdown. Your emotions are all over the place. And before you know it, big losses, maybe even crash your account very fast. And of course, when you revenge, you have a loss. You're not happy. You have another loss. You now have consecutive back-to-back losses. Your emotions are all over the place. You are angry. You want to get that money back and then you revenge. Just like in the movies, revenge is not the way to go about the business, right? Emotional imbalance. Your emotions must be in check. You must know how to control your emotions. And then I tell traders today, the best way for your emotions to be balanced is when your risk is well calculated. Imagine if you have a $1 million account, $1 million account, and you are using 0.01. Trust me, there is no loss on 0.01 for a $1 million account that would pain you. So your emotions will be in check. Even if you're not trading with stop loss, you can easily close it without feeling angry because what? The losses are not heavy. Most of these issues that traders are facing is also as a result of big losses. So the big losses makes them to feel one way or the other, and then the market takes over, not them. Fear and greed. This is a killer. Fear and greed. Fear, greed, negative. Of course, fear and greed are both negative. Why are traders afraid? They're afraid from the many losses. And as they're afraid from the many losses, what did they do? As they're afraid from the many losses, what did they do? They don't play straight. They're afraid to play straight. And they don't play straight, you can't make money. Simple. Fear and greed, negative. You have losses, 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 maybe blown accounts. You are now afraid. There's fear. And you can't play straight anymore because your emotions have taken over. The negative side of the emotions have taken over. And then you can't play straight. You don't play straight, you can't make money. Simple. Greed. You want to make $1 million. You're placing too many trades. And before you know it, you want more, Oliver. Even if you're making profit, you still want more and you want more very fast. You either place too many trades or you place with big volumes, big losses, big lot sizes, and that's when things go haywire. And that's when the market decides to do what? Decides to take all your profit away in just one or two trades. Patience and discipline. A lot of traders lack patience and they lack discipline. This aspect have to do with your emotions because patience and discipline are something that number one cannot be taught on paper. But if you follow certain rules that we're going to talk about, because now we're looking at the headaches, we're going to talk about the solutions shortly. So, with all these headaches, patience and discipline is also one that cannot be taught, but by following rules, you can, at the end of the day, get better at your patience level and also your discipline. Stop loss placement. This is one of the initial major issues, major problems, major headaches that traders are facing. And this is as a result of the analysis. We talked about copying someone's trades earlier, and the person doesn't use stop loss, and you don't use stop loss. You don't use stop loss because you don't know where to put the stop loss. But stop loss is part of your trading, it's part of your analysis. It's an exit for a loss. Take profit is an exit for a profit. So if you place a trade, you enter the market without stop loss, you are only gambling. You are only doing what? You are only gambling. Some traders might also know where they want to exit, but then they don't put a stop loss on the chart, and then news comes out, high impact news. You remember at the very beginning of this webinar today, we looked at what? We looked at the calendar. As the calendar was filled up with so many news, we said what? We said you need to be careful, right? Know when the news are going to occur, so that you can trade accordingly, or maybe not even trade. Poor risk management. Traders don't know how to calculate their risk today. They're using risk that is way too heavy for the account to carry. I repeat, they are using risk that is way too heavy for the account to carry. And then before you know it, the losses are actually big. Your losses are meant to be well minimized, and then your profits should be well maximized. That is how trading is supposed to be. And that is a good way to look at the risk to reward. At the end of the day, you make sure that your losses are well minimized and your profits are well maximized. Very key, very important. Changing strategies. If a struggling trader is here or you're watching this on a replay and you've been struggling for months or even years, and I ask you how many strategies have you used, I want to believe you will not be able to remember how many because you have changed so many strategies, because when the strategy is working, you are happy. But by the time it starts failing, what happens? You are sad, you are angry. And what do? You decide to what? You decide to change strategy. And then the same thing occurs again, making profit happy, losses angry, and then you change so many strategies, and before you know it, you are just hopping around. But I tell traders today, there is no strategy that is 100%. Stick to one simple strategy, and do what? Enjoy the losses and the profit. By the time you enjoy the losses and the profit, you'd actually know when the profits come, so you trade more during those periods, and then you know when the losses occur, and then you avoid trading those periods. Simple. No need to change strategies. Your broker is monitoring my trades. Have you guys heard this before? I hear this a lot. You remember I said from my history, I have worked for brokers. And as a financial market analyst, as a coach, as a mentor, even as a sales rep, because I talk to clients under sales rep, under account managers, when they say, you guys are monitoring my trades. And then we have to explain to them, how many traders do you think are under the broker? Now, how many traders do you think the broker can actually monitor? It is your own thought process. Why? Simply because you are losing. That's why you say brokers are monitoring your trades. But when you are making money, do you say that? No. So forget about that. Traders, forget about that. I repeat, brokers are not monitoring your trades. They don't have that time. How much are you even trading with? Most traders are trading with $100 or $200. And are you the kind of trader that brokers have time to watch if they're going to watch people? I don't work for brokers anymore. I'm running my own academy. I can tell you they don't have that time. No trading plan. In life, you must have a plan. And when you are trading, you must have a plan. No trading plan means that your trading is all over the place, it's scattered, or you're trying to trade the news. I'm not saying you should not trade the news, but trading the news is what? We just talked about the news at the very beginning, is the volatile period. You trade the volatile periods and you're having losses, you would have only yourself to blame. During this news period, by the way, some usual things happen. You could easily have whipsaws. You would have spread increase. That means that if you want to enter at a particular price, you could easily trigger your entry somewhere else because the spread is going to increase. You could have slippage. Slippage is also something that you need to be aware of. Slippage, in summary, means that your stop loss or take profit don't trigger where they are. When the slippage occurs during news period, high impact news period, it's like price is moving from 1, 2, 3, 4, 5, and it now moves to 9. It skips some numbers because of the volatility. And assuming your stop loss was at 6, and it moved from 1, 2, 3, 4, 5, about to hit you at 6, and then jumps to 9. That trade is going to close at 9 and not 6 because that price was not available. They skipped it based on the high impact news. The same thing occurs for profit as well. right? You could skip your take profit and then end up giving you more profit. Some of you would understand what I'm talking about. Itchy fingers. You can't sit down your hand. You must enter the market. You must place a trade. And then you force trades. And then you enter the market. And then you call yourself a trader. Look, a trader is a trader, whether in the market or not in the market. A trader is one, a professional trader, rather, is one that waits for the opportunities to come. Even if it takes a few days or even a few weeks, you wait for those opportunities to come based on your plan, and then you strike. That's it. So walk on your itchy fingers, sit on your hands, don't stare at the market, shut down your system, go and do something else. Come back at intervals. And trust me, your itchy finger would be solved gradually. So what are the prescriptions to all of those things? You notice that we mentioned about 20 or more thereabout issues that traders are facing. And with all of these issues, there are actually more. With all of these issues that traders are facing today, it is now the prescriptions. What are the solutions to these things? Now, trading strategy. Do you have a trading strategy? Remember earlier we said stick to one. So one of the major prescriptions is for you to use one strategy. You use one strategy, is going to help you to know when to enter the market and when to exit the market based on the day of the week, the time of the day. So you're going to be solving a lot of issues by sticking to one trading strategy. You are going to work on that aspect of fear when you use one strategy, because you know that strategy, you know that cow very well. What will happen? You'll be able to ride the market well enough. And then you know your stop loss placement. Don't forget your strategy is your analysis. And this has to do with your entry and your exit. So you know where to exit the market. So knowing where to exit the market, you have removed that issue of no stop loss placement. Because that is one issue, one problem, one headache that traders are facing. So you know what? You know where to put your stop loss, then your strategy is complete. If I were to ask you which is more important, entry or exit, I'm sure a lot of people will say entry. But trust me, think about it. Your exit is more important. You cannot enter the market without knowing when to exit. That is dangerous. But when you know where to exit, when you initially know where to exit, then it will help you to know where to enter. That will give you the best profit. So trading strategy is very important. Trading plan. Do you have a trading plan? This trading plan is your rules, is your guideline to trading. It's going to help you to know the instruments. You make a list of the instruments. It's going to help you to know the risk. Are you risking 1%, 10%, 100%? Put it down. And your trading plan must make sense. Don't put a plan because you want to make plenty of money very fast. Your trading plan must make sense. In your trading plan too, you could also put down the type of trader that you are. Scalper, intraday, swing position. You can put down the style of trading. Are you a trend trader? Are you a counter trend trader? Have a trading plan. A lot of traders don't have plans. And those that have plans do not follow their plans. You don't follow your plan, it is still trading anyhow. Before you place a trade, look at your plan. Make sure that before you enter, it fits your criteria for entry and even for exit. Very key, very important. Trading journal. Do you have a journal? Do you keep records of your trades? Very important. Waiting for opportunity. Okay, thank you, Teresa. Just saw your reply. Right? Trading journal. Do you have a journal? Very what? Very key. A trading journal, as the name implies, a journal is record keeping. You don't keep records, what happens? You're just trading. But what is the advantage of keeping records, keeping a journal? Even with your winners and your losers, you keep records of them. And by the time you know it, maybe Monday now, you've checked your journal after 3 months or 6 months or whatever duration. And you notice that Mondays is when you have most of your losses. When you have most of your losses on Monday, What does that mean? That simply means that you should avoid trading on what? You should avoid trading on Mondays. I repeat, when you have too many losses on Monday, your trading journal should tell you that you should now avoid trading Mondays. Simple. And then, as an example, on Wednesday, notice that that is when you have most of your winners. What does that mean? That means that your journal is talking to you. A lot of people don't have a journal. Your journal will talk to you and communicate the best time to trade, the best time not to trade, the best instrument to trade, and so on. So when you have that plan and you execute the plan and put down the trades in your journal, it's going to give you all of this key information. And trust me, this information is going to help you and propel your trading to the next level, right? Okay, I can see a question coming in, a question on Asian session timing. Give me a quick second. We'll get back to that when we enter the question section. But now, if you have questions based on what we're talking about for the trading headaches, please also comment as well, right? So, trading journal, very important. So now, questions. If you have questions based on what we've talked about today, because we're going to be rounding up in a few minutes, questions based on the headaches that you have been facing, let us know those headaches. And then we'll give you the solutions to them. Like the question I have right now, right, from Emmanuel has to do with what time does Asian session start and end? This could easily be a headache. Maybe you want to trade the Asian session. You know the market is 24 hours. You want to trade the Asian session, but then what happens? You don't know whether it is morning, afternoon, or night. So I'm going to be giving you the timing. I'm going to give you the 24 hours timing for all the sessions that we have. So if you have your writing material, please bring it out and let's look at all the timing for Sydney, Tokyo, London, and New York. Are you ready? For Sydney, for Tokyo, for London, and for New York. Okay, so the first session that we have is Sydney. I repeat, the first session that we have is Sydney. And Sydney starts today because the market starts by Nigerian time, that is, the market starts by 10 p.m., 10 p.m. Nigerian time. I'm going to use Nigerian time so it will be good for you to take note of. So Sydney starts by 10 p.m. and Sydney, of course, is to Australia, starts by 10 p.m. and runs all the way to 7 a.m. 10 p.m. to 7 a.m. And then Tokyo, which is your Asian session. Tokyo starts from 1 a.m. in the morning, our morning, 1 a.m. to 10 a.m. And of course, you know, that's more or less the beginning part where we are asleep. And you can see that Sydney and Tokyo, they overlap. So did you get that? Tokyo, 1 a.m. to 10 a.m. And then the next one is London. London session is 8 a.m. 8 a.m. to 5 p.m. And the good thing with London session is that is more or less the Nigerian session as well. Because if you ask what time the banks open, it is 8 a.m. And you know this market obviously has to do with the banks because that's where we get majority of the liquidity from. So London is 8 a.m. to 5 p.m. And then the final one, New York. New York is what? New York is 1 p.m. to 10 p.m. 1 p.m. to 10 p.m. And then 10 p.m. starts again the Sydney session and so on. I hope you got that. For the person that asked the question on the Asian session, the start and the end time, let me know if that was clear enough for you. Comment in the section. Your feedback is always good for us to know if we have answered your question to your satisfaction. So I'll wait for feedback on that. And then another question, how do we know our daily bias before looking for trading opportunity? How do we know our daily bias? Now, for you to know your daily bias, it has to do with the chart. The chart will tell you the daily bias. And based on the time frame as well, it will help you to know the daily bias. What is the bias for today? What is the bias for tomorrow? Right? So I'm going to show you a chart. I'm going to show you a chart quickly to explain how to start looking to understand the directional bias for today or the directional bias for the week and so on. So let's cross over to our charts. And now you can see we have a chart in front of us. We have the Euro USD. And this Euro USD, we're looking at it from the hourly time frame, right? But any time frame that you want to look at it, right, will determine that bias, that directional bias for that period. Okay, so thank you. You said Claire. You said yes, Claire. Thank you. Okay. So for the other question on the daily bias, based on the time frame you're looking at, based on the trend, because it is the trend that will tell you the bias. If I were to ask you, what is the trend on this chart that we have in front of us? What is the directional bias? What is the trend that we have? Looking at this, you can see that the market is what is moving down, right? So as the market is moving down, remember this is the hourly time frame. Today is 29th, as you can see here, and all the way from 18th, from about 10 plus days ago, the market has been moving down for Euro USD on the hourly time frame. So what do you think the bias for today most likely was going to be? What do you think the bias for today was most likely going to be? It was going to be a continuation, which is down, which is what we have over here, right? So what do you think the bias is going to be for tomorrow? If you ask me, the bias too is more or less going to be down for tomorrow, but there's what we call pullbacks, retracement, meaning that price is going to pull back to a particular area for price to continue to go down. Well, based on what I have right in front of me, my directional bias is still to the downside, and that is for tomorrow. The time now is just about 2:40 p.m., and that is Nigerian time, WAT, 2:40 p.m. The market is going to be ending by when? 10 p.m. Remember, we just talked about the sessions. So we still have like more or less 7 hours to go. But with that 7 hours, I more or less have my bias for tomorrow. And this is all in front of you. It is how you look at the chart. So you look at the chart, it gives you the information to be able to say, okay, my bias for today, my bias for tomorrow is XYZ, and then you follow through. So tomorrow, my bias is what? Is first of all, a pullback and then a sell. And then don't forget, the bias can always change at any point in time. The market can change direction at any point in time. And then what did we talk about at the very beginning of our webinar today? Who can help us? That is the question for you. What did we talk about at the very beginning of our session today? Who can help us out? That answer will let me know that yes, we are paying attention for those that are here live. If you are here watching it on a replay, of course, you can always rewind it and answer the question. But what was that thing that we talked about at the very beginning? Maybe you guys did not join early, but we always advise join early. This is free webinar. It's free information to help you at the end of the day, right? So if no answers are coming in, there might be a delay from when I say something and when you get that information. But let me help you out. The first thing we talked about was what? Was news, high impact news. So if we have high impact news as we do for tomorrow for the USD, it can easily change the bias. It can easily change the bias, or it can fuel the bias, meaning that it can make our bias to even move even harder and faster. But take into consideration the news. Why? Because this news is going to help us with what? Going to help us with the volatility and how the market is going to move. So now we are gradually going to be rounding up because of time. We don't want to make this too lengthy. And then we always say, if you have further questions, you can join us in our Telegram community write down your questions, and then we help you with the answers. I can see a last one. Let me see if I can quickly read it and quickly answer within a few seconds that we have. This is a follow-up question, I believe. Does it mean that we can look for daily bias from any time frame? Yes. For your daily bias, as we have just shown you from 1 hour, I have been able to determine the bias for tomorrow. And come tomorrow, please take note of this. Come tomorrow, if the market should actually pull back, as we have just said, if you pull back, meaning that we could have tomorrow as an up movement for this Euro USD, and maybe it might even be Wednesday that the market might now drop, might now continue the directional bias. Continue. Because in as much as this is going down, we're looking for sell opportunities. It doesn't mean there will not be buy opportunities within the major sell trend. So the bias on this chart is down. So that means that the bias for this week would also be down. And we're looking at it from the hourly time frame. Doesn't necessarily mean that you need to look at the daily bias from the daily time frame. No. So if you're thinking daily bias must be strictly from the daily time frame, no, no, and no. Right? So tomorrow, if what we have mentioned now, if it works, then you'll know, yes, indeed, truly, truly, I can determine the directional bias from any time frame of my choice. So 1 hour time frame I like, 4 hours time frame I like. Those two are very good when it comes to directional bias for the day and even for the week. Not necessarily 5 minutes, not scalping, because that scalping could be directional bias for a short period of time, right? So 1 hour, 4 hours is good, but technically any time frame is good for you to be able to determine the directional bias. Okay, with that said, we want to say thank you for joining us today in today's webinar. If you have further questions, join us in the Telegram community. The link will be in the description of our YouTube videos. So use that to join us. You have questions, you need assistance whatsoever, let us know and we will help you out. Okay? So I want to wish you guys best of luck in this week. And don't forget, the first thing we checked was the calendar. There's going to be high impact news, a lot of them this week. So make sure you consult the calendar so that you are not caught off guard when the market goes crazy. And then the market this week, trust me, is bound to go a bit crazy in terms of volatility. So thank you guys for joining us. If you need further assistance, if you are new and you didn't really understand a lot of the things we were talking about, let us know and we can assist you as well. Because new traders would not have as much headache as those that have been doing this for a while. Okay, guys, thank you, thank you, thank you. Enjoy the rest of the day and trade safely this week. Cheers for now. Goodbye.